tweets from May on this stock. The thesis was that this was the best positioned AI mid cap. When you looked at all the AI mid caps in May, it's a bunch of shit codes. It's like ticker AI, BBAI. It's like all these companies that have just like put on the AI badge with their shit codes. Nebius, if you did your work, you knew was not a shit code. Okay, they have a deeply talented team with like over a decade in AI experience in an industry that's basically brand new. But the thesis on Nebius was that they had multiple quality businesses that were likely worth multiple billions each. I'm talking about their subsidiaries, and the stock was trading at like a 5 billion market cap. The valuation was nonsensical. The reason that people didn't pick up on Nebius in May, people who didn't do the work, or even the chart guys didn't pick up on it, the reason why is because you go look at the balance sheet or you go look at the earnings and it didn't make sense. The numbers didn't make sense. People are like, why is the company trading at a $6 billion valuation with no earnings? But those people obviously did not know the story. They didn't know that Nebius owns 28% of ClickHouse, that they own Toloka in its entirety, that they own AV Ride in its entirety. These are multi-billion-dollar businesses. AV Ride is a globally deployed autonomous robotics business that actually has real customers and actually delivers real products. That's a multi-billion-dollar business. ClickHouse, probably a 15 to $20 billion business. They own 30% of it. So everyone was staring at the stock going, oh my God, they don't make enough revenue for the market cap to make sense. It doesn't make any sense. And the stock went higher and higher and higher and higher and is now 120 bucks or whatever it is. Right? It was $23 in May. But that was the story. The story was never about the data center business. The story was for Nebius was, yeah, they might win a data center contract because of their deep set expertise and the fact that they have arguably one of the oldest data center business out of any mid cap company in the market. That was an upside scenario. It was like the cherry on top. It was like, hey, they might win a hyperscaler deal, right? So Nebius was a quality AI company that won a data center deal to drive an additional upside in its valuation. On the contrary, most of the other HPC companies out there are shitcodes that are pretending to be AI companies. That's the difference. They're Bitcoin miners
Yeah.
or they're whatever, and they're like, hey, we're an AI company, or we're an HPC company. That's the difference. Nebius was an HPC company from the get go that had a diversified set of AI assets that are worth a lot in this market environment. So that's the Nebius story. Nebius to me is like the sort of, or was a mid cap, not anymore. Now it's a large cap, but was the mid cap king of AI and is now like, sort of a young prince in the AI space. But their management team is firing on all cylinders plus one. It's just an incredible management team.
This AI wave is definitely continued to pick up going. There are some points that are very interesting right now. Interesting days. Just to switch this off a little bit, we don't need to go too far into this. We do have Nike reporting earnings after the close today. The numbers should be out around 4:15 p.m. Eastern, so in about 30 minutes, but we do have the market closing in 15 minutes or so. Wall Street's expecting revenue around $11 billion, which would be down from last year. Same quarter last year, they reported revenue of looks like 11.6 billion. And then EPS would be 27 cents, and that would also be down from last year. I do know they announced this Kim Kardashian Skims collab thing. I know Stock Talk was very excited about that one, but who knows with all the Sydney Sweeney stuff and other things going around. You never know what collabs could invigorate a brand. But Nike does report earnings today after the close. It's important to note that came in literally on like Friday, so that was pretty much the end of the quarter. Or this would be outside the numbers would be reporting for. But Nike earnings coming up after the close today. It's moving higher now. It's green is at 69.82. 69.82 is where Nike is at. In general, my portfolio is moving a little higher here as we head towards the close. It's nice. We got any Nike watchers or fans as a part of the panel?
I mean, I love Nike as a brand, but I don't think I've touched the stock in a long time.
Do you actually still like it as a brand?
Yeah, I mean, I love Nike as a brand.
Me too.
I'm
I'm a
a
fan.
Nike
See,
guy.
people seem to not think it's cool anymore, though.
I still think Nike's dope. I mean, the thing with now what's happening is that athleisure has become sort of its own category, it's bellowed into its own category. And I think in the wake of Lululemon, people thought that was going to happen. But Lululemon was really the first global company to sort of embrace athleisure as like its own category. and like model the entire business around it. But now you have like Arc'teryx, you have so many emerging athleisure brands, many of them priced, you know, at half of globally branded competitors. That's tough to compete with. Like I've never understood the apparel business from an investor standpoint, from a growth investor standpoint. I've never been a fan of the apparel business. I've never owned an apparel company as an investment ever. I don't think I ever will. Same thing with like food companies. Like
Mhm.
I know I know QSR has opened up like a new category of food stocks, but same thing with food companies for me. I just like can't wrap my mind around the businesses. I like businesses that have like a knife that they can use to carve their space out in the industry, and I just can never envision that in apparel and food. So I stay away from those. I'm not only a tech guy, but those industries specifically, I stay away from.
Well, I don't know. I think it's just a different thing that cuts through. Like food
It's
quality
it's
is
harder to
something.
identify the knife, though. You know what I mean?
What I've seen clearly is people don't enjoy investing in the food companies and food stocks like that. Maybe there's some that rise towards the top, but people are just not
If I could
interested in it.
find a clear edge, I would be fine with it. I don't really care that much about the types of companies I invested in. It's not like I look at it and go, "Oh well, apparel's boring." I just find it hard to identify the knife. What I mean by that is like I don't even mean it as a moat, but like there's a thing that companies use. Sometimes it's a technology, sometimes it's like a really all-star CEO, but there's a knife, you know? I like to think of it as a knife. And they use that knife to like carve their portion of the market share out. And sometimes it takes years, but you can usually see the knife in the early stages. Like, yep, they have a knife. And that's kind of how I like to think of these smaller mid-cap companies. Like,
You know who has a knife?
they have a knife. Yeah.
You know, who has a fat knife,
Who?
a DraftKings down 13% knife.
Okay, I'm guessing you want to talk about that because you tapped me on it earlier. So let's just get in. Let's just talk about that then. Just get it out of the way.
No, I thought it was
Um,
just a good. I thought it was just a great segue opportunity. I was just kind of proud of
sure,
myself
sure.
there. We
Well, I
are
mean,
pumping
we
into the close a
segued now.
little
So
here,
now that you brought it up,
by the
it's too
way.
late. So yes, the gambling names are weak today. Even Genius Sports is weak today.
That one doesn't make sense. That one's obviously
Yeah,
short
so
term,
I've been doing some
but
research last couple days on this because this has been coming up more and more now. Like this whole idea of gambling, betting markets versus um, sports books. So I did some research on it today, and from what I could gather, and I don't know if this is 100% accurate, but there's a company that Robinhood has used in the past, and so has Kalshi. It's for sports betting data. Um, that this is going to sound silly. That apparently has employees that attend games live all over the country and tabulate the scores. Now, I don't know if they're still using that, but if they are, that is not scalable, obviously. And if you're taking in millions of bets, you're not going to do that. So the question becomes, is this an overreaction in Genius? I think probably because the likelihood that they become real sports betting players without using the master data feed to me is very, very low. Now, there may be a workaround that I am not aware of, which could be a thing. I don't know. But based on what I've seen, it felt like an overreaction today. Now, as far as the actual sports betting names, like the reaction to the actual sports betting names, like DraftKings, I don't know if that's an overreaction because we talked about this a few weeks ago. Actually, this specific topic, we talked about it for like 30 minutes, and I gave a whole rant on it. But the point I made was that in this space, because of how dirty of a customer acquisition war it's been for years, these guys are coming to a point now where they have to decide: are we going to operate under the assumption that Kalshi and Polymarket will be handled by regulators, and that this is and buy them at a market premium and hope that they say yes? That's the decision that DraftKings is put into right now. That's probably the decision that basically any online sports book is put into right now. Like, are people going to prefer just doing it this way? And not just prefer it from a consumer preference standpoint, but prefer it in terms of access too, right? Like people like I in Texas, we can't bet, but you can use Polymarket and Kalshi. Texas has a lot of people. So, do those 30 million people just by default prefer betting through odds markets because it's available to them? I don't know. So this is a new, I would say this is in the last 3 months, this has become a real concern for Las Vegas and for in general for online books. I don't even want to say Las Vegas because that more so refers to physical casinos, but even for them, maybe even for the physical casinos, maybe this is just another layer of removal from the physical casino marketplace. Now, for the digital books, now they're looking over their shoulders saying, like, how much market share is this going to eat? How quickly is it going to eat the market share? And perhaps the most important question of all, always too late to pull the trigger. And the analogy that I brought up for this sports betting conversation last time we talked about it was the Zuckerberg acquisition of Instagram. And I'm sure people have read. I'm not, by the way, I'm not likening Kalshi messages was basically that, hey, we either buy them now for $1 billion, which might seem rich, or we risk them becoming a much bigger company in the near future. That's what Zuckerberg said in those famous leaked messages from when he acquired Instagram. Now, what's the thought process behind there? Well, at $1 billion, I mean, argue with whoever about that. I mean, at the time in the status quo, who knows? Maybe there was a debate to be had around that. In fact, the people that Zuckerberg was talking to said he was paying a premium. Now, in hindsight, he did not pay a premium, right? I mean, in hindsight, that acquisition was Instagram's market cap goes up and an acquisition either becomes impossible or becomes far less likely. And so now DraftKings and Kalshi and Polymarket are in the same soup. And DraftKings is probably sitting there, I would imagine, in the last 3 or 4 weeks. Their board is probably sitting there like, should we buy them? And if we do make an offer, what should it be? And how much of a premium are we going to need to pay to really get them off of feet? Because Kalshi probably feels like the prince in the room right now. They're probably like, oh, ho, 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 we're getting market share within 2 months of launch. Like that's a pretty big feat. And if they can hang their hat on that and be like, okay, let's keep pushing. Let's double down our partnership with Robinhood. Let's go to every commission-free broker in the country. Let's let people bet with money where they already have it on their brokerage apps. Like they could just double down on that and really, really pick up steam quickly. So the sports betting space is a very, very interesting space right now. Over the next 6 months, I think there's going to be a ton of volatility up and down on those names because there's going to be fears around that, and I think rightfully so. It's a legitimate industry catalyst. I don't want to dismiss this. Sometimes there's narratives that can emerge that are worth dismissing. In fact, 99% of the shit you hear people talk about is just worth ignoring. But sometimes there are narratives that come up that are worth paying attention to. This is one of them. And this will change the industry, the way the industry operates. Obviously, the simplest solution here, the rip the band-aid off solution, is that regulators just say no, can't sports bet through prediction markets anymore. That would just end the whole thing right there. But if that doesn't happen, then it becomes really complicated and probably becomes an attempt at M&A that may, I mean, Kalshi might just I don't want to say the word, but Kalshi might just step into the room and be like, "We're not taking your money. Like, we don't want to be bought out," and that could
What
make it more
what a
interesting.
close.
Yeah,
What a close. Yeah, this is I don't know, while we were talking here, we are ripping a little bit. We are ripping a little bit.
yeah, I
Nice little
noticed that you're
close.
talking.
I think this is a
Got
really
that
interesting
mark up.
conversation because also I'd be intrigued to see what happens with Robin and here and their role as it they've just been going through Kalshi. Is that a relationship that continues and thrives and stuff like that? Who's really pulling the weight on that one?
Robinhood's pulling the weight. Let's make no mistake. On the volume side, Robinhood's pulling the weight. I mean, think about how many kids with the Robinhood app installed are just sitting on their couch on Sunday and then saw
They're
that
all
pop
betting on
up.
sports. If you saw, like 95% of this is on sports, which is why I feel
That's
like
what I'm saying.
Genius is probably still safe. But
Yeah, that's what I think. I think Genius still like this is the thing I don't know in this equation. I want to be clear about what I know and what I don't know. I know this industry well. I know all the industries that I invest in well. But this is what I don't know. I don't know if they can offer more comprehensive betting props without using the master data feed. In my mind, they can't. but I also don't know. Like, I don't know if there's workarounds to that or whatever, right? And I also think, like, at a certain extent, if the business is big enough, why cheap out? Like, if they are using a third party provider for data today, which if they're not using Genius, they have to be. Like, if this becomes the scale of a multi-billion-dollar operation, you're not going to use the master data feed with zero latency. Like, I would imagine you would want to. So yeah, from that perspective, I think it's probably an overreaction. But I have such a deep cost basis advantage on Genie. I don't really worry about the day-to-day volatility that much. The monthly charge still looks perfectly fine. So it was down today, but that was whatever. I'm just going to go ahead and knock out all the stuff I was going to talk about today, and then we can circle around because I'm already
Nike
rolling
earnings
on. I'm going to
4:15,
forget.
by the way, and then the market close here, that's the end of the quarter. So a lot of window dressing that could also be what this is going into it. Nike 4:15, by the way. You can
Yeah,
go
you know what I
stock
always
talk.
say about window dressing is you want to see your windows being dressed. You know, people
Nvidia with a beautiful move into
people just
the
miss
into
end
the
of
quarter
quarter.
what does
close.
that mean?
I'm saying, like, people just miss end of quarter action because they go it's window dressing, and I'm like, but you still want to see your windows being dressed, right? Like, you want to see your stocks being bid in those moments. Yeah, it's window dressing, but price action matters either way. It doesn't matter. Like, if charts are saving themselves at key spots on end of the quarter action, don't just write it off because it's end of the quarter action, right? It's still significant when you put it in the context of the broader chart. So I like a lot of the moves that happened today. Honestly, there were a lot of great
One
ones.
other one other story,
Yeah,
then I'll let you go into it. There was a story a couple days ago that Occidental was in talks to sell its petrochemicals division for $10 billion. WSJ put out an article while you were talking that apparently Warren Buffett and Berkshire Hathaway, probably more Berkshire Hathaway than Warren Buffett, are reportedly ones in talks for the deal, which would be their largest deal since 2022. $10 billion. I mean, this is a little significant, I think, because we've all been watching his cash pile grow and see when they're going to end up making moves. And I guess petrochemicals, Occidental's petrochemical business is the one that got them to make a little bit over the edge. I don't know that much about it, but I thought the Warren Buffett name. We are coming into the market close here any second now. Stock talk. You can go into it. Ding 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 ding.
yeah,
We'll upgrade the bell someday.
yeah, yeah. So yeah, today was obviously a great day. I talked yesterday about the only small cap that was in my portfolio, which was DPRO, and some of you may have seen they got some pretty big validation news this morning from the U.S. Army to
All right, so
deploy
what is
their
this? What is
drones.
D Pro? I don't. I did not listen to this one, but I
Evan,
don't think I was here.
this is such a bad look, Evan, because talk about the stock like 10 times, and now you're like asking me
I
what
was.
it
I
is.
don't
So
think I was here with D
anyway,
Pro
you
when we
probably
talked
were
about
here,
D
but
Pro.
it's okay. Anyway, T-Pro is a small cap drone company. They do heavy lift drones, and they have for a while because they were had to have a Canadian
45
HQ.
million.
Yeah, they well, I think the market cap on that is incorrect. I believe it's listed at 152 on other sources, but I don't know. It depends on the free flow calculation. But anyway, they we got long on it at 519 back in, when was the entry here? A while ago, a couple weeks ago, not very long ago, but a couple weeks ago we got long at 519. Stock was trading as high as 9 or over $9 today. It was up as much as 30% off the open because it closed up about 17%. This stock posted more volume this quarter than its entire 5-year history combined. I posted that chart about 4 days ago, noting that. I said when a stock posts its highest volume in one quarter than the whole stock combined, you should probably pay attention. And then 2 days later, they get the Army contract. So good timing, I guess, on that. But yeah, that was September 26th that I put that tweet out. I'll pin it at the top. But this is a name that me and Mystic, who's an analyst on our server, he's a very good friend of mine. I don't like share ideas or like follow ideas from anyone except for like two guys, and that's Mystic and Yonezu. Those are the two guys that I'm constantly talking to about stocks. They think about stocks the same way I do. They're original idea guys. In other words, they do their own research. They don't read other people's ideas on Twitter. Like, I always look for the guys that are OGs with their idea generation. And those two guys have been friends for mine for years. And I respect them both a lot. I talk to them a lot about stocks. So back on September 9th and 10th and 11th, me and Mystic were like DMing every day about D Pro, and we were like, dude, is this just mispriced? We were looking at the peers and ONDS, RMAG, UCAT. They're all trading at like $1.5 billion valuations. Be mindful that most of these drone names don't have much revenue or any at all, right? They have a couple $1 million in quarterly revenue. But they're all trading at inflated valuations because obviously drones are going to be a huge thing. The US government has made it very clear that they're prioritizing drone manufacturing. So there's been a ton of,
There was a story
you know,
today. Trump came out and said that he plans to spend $1 trillion, or was it a trillion?
yeah,
Am
there
I
was a
making that
whole
up?
speech about about defense spending, U.S. Navy ships. I'm going to talk about all that later too with Huntington when I go into Huntington. But yeah, I'm going to touch on that. But yeah, so there's clearly been an initiative by the U.S. government to build drones, and you've seen how AeroVironment's done, which is really the drone leader. You've seen how Kratos has done, which is another sort of drone leading stock. Both those names are up substantially, are trading at pretty crazy PEs now. I'm obviously still long Kratos. That's the core position in my aerospace and defense basket. But I did add this small cap name a couple weeks ago, and I'm glad I did because the stock has basically doubled since in a few weeks, and now got a major validation from the U.S. Army this morning. Keep in mind, this is a company that for this size of a company, this is a significant thing. But the U.S. Army agreed to start a program with Dragonfly this morning to build and manufacture drones on U.S. bases. So not build them in a factory, but to build and manufacture them on US bases, which I think is exactly what this type of company and these types of drones need. And I think is a huge tailwind for their deployment. So I wasn't surprised the stock was up so much today. In fact, I'm surprised it didn't close even higher. The fact that it closed up 17%, I think, is a bit of an underreaction, frankly. But I think this thing continues to trend much higher. With this cost basis, I don't think I'm going to be a seller on this thing anytime soon. I have such a huge cost basis advantage now on this in 3 weeks that I can ride it pretty comfortably. But this is a validation. This is how small caps work. There are moments of validation for their technology that are really important. Now, here's the rub with D Pro. This wasn't even the catalyst that me and Mystic were looking for, right? So that we got this catalyst today, but this wasn't even the catalyst we were looking for. We were looking for a catalyst around the T-Rex program, which D-Pro is the only small cap drone company in the world that's on the T-Rex program. And so that catalyst is what we're looking for. And that could come who knows when. And so, you know, when this does rear its head, I think there could be another catalyst on the horizon, right? And for people that don't know the T-Rex program, it's the DoD's Technology Readiness Experimentation Program for next generation defense. Their abbreviation is T-Rex, Technological Readiness Experimentation Program. But anyway, that's the catalyst we're looking for. So sometimes you're waiting for a catalyst and you get a different one, and you're like, oh, that's validation. So I think that was fantastic for D Pro today. That stock has just soared in weighting in my portfolio. It started off, I think, as 3.5 or 4.5%. That thing's like soared in weighting to over 8% now. So that's what happens when a stock performs. But yeah, little small cap name climbing its way up in my portfolio. But been a beauty. It was an absolute beauty today. But not even just today. It's just done nothing but go up since we bought it. So I don't even want to highlight just today as important. But D Pro has just been a monster stock.
So just a comment there because I've known the founder for a couple of
Oh,
decades
that's
as a
awesome.
Canadian. He's a notorious promoter. This is a low float stock. You can't borrow it, short it. You'll note that there was no dollar amount in this contract. This isn't the first time that they've announced contracts without dollar amounts. You actually dig into the SEC filings and look at their numbers, and there aren't a lot of dollar amounts there either. So, it doesn't mean you can't make money, but, on a spectrum of credibility, there really isn't a lot to most of these small cap drone companies, which you aptly pointed out. But I do think that there's place in a portfolio for a barbell approach where you can, knowing what you own, and I'm with you. I own some of these smaller cap names. Our community was early on Red Cat and made a bunch of money on UMAC again today, and so on. I don't think a lot of these valuations are defensible, but I've anchored that like you have with the other side of the portfolio with the guys that are leaders in hypersonic, et cetera, like Carmen and Katos, et cetera. So But keep those things in mind. If somebody actually ends up being able to find some stock to short on this thing, you could see some near-term volatility. But yeah, 5 million in float. This kind of news, U.S. Army, it's going to do what it's going to do, and yeah, don't marry it.
Yeah, I don't think you should ever marry a small cap if you don't want to. There's always risk caveats, but yeah, these companies have diluted in the past. I think UAVS has a much poorer history of doing that. DPRO's dilution history has actually been relatively decently timed, and I expect dilution with small caps. But I think the Tier X program could be a major validation for them. So I am remaining long on that name with a nice cost basis cushion. But yeah, the chart is, to me, speaking volumes. You don't post highest ever quarterly volume on a stock like that with 50x the quarterly volume unless there's somebody interested. And there haven't been enough insider sales to justify that level of volume either. So somebody's buying this thing in droves and has been buying this thing in droves for the entire quarter. It has, in my opinion, the nicest volume profile of any small cap in the entire market, and did as of 3 weeks ago. So that's a compelling opportunity, and that's why we pulled the trigger on it. And it's obviously basically doubled in 3 weeks. So plenty of obviously room for some air to come out of it, but I would not mind to see it go down 10 or 15% on an offering if they needed to. In fact, I'd love to see an offering here to accelerate deployment of their production capacity. So yeah, I'd actually love an offering. I like offerings when smaller companies do them. When Nebius did their offering, people were like, oh, be careful. Nebius doing an offering. When Nebius' CEO filed for $200 million in stock sales, literally a week later, Nebius announced a Microsoft deal. So there's a lot of noise in markets. There's going to be insiders selling. There's going to be all sorts of stuff like this, but you have to be able to take a comprehensive view, I think, on stocks, take a technical and a fundamental and a catalyst driven view, which is what I do. And which is why, we have so much consistency with these picks. What I will mention today also is a name that doesn't get talked about a lot, but I've talked about here several times, which is Huntington Ingalls, ticker HII, which had a fantastic day today. It was up 3%. That's a lot for that stock. It's been breaking out of a period of consolidation here that it's been in for quite a while. It was trading in the 260 to 270 range since the beginning of August. Today pushed into almost 290. It's basically graduating out of that price range. Buyers are stepping in above the local highs, which is nice. And above 290, this thing I think goes right back off to the races. You look at the volume profile from August, beginning of August to now on this, nothing but accumulation. Very few sellers. In fact, you can't find sellers on this thing all year. Pull up the year-to-date chart, look at the volume profile. Nothing outside of the very beginning of the year in February at the lows, which is understandable. A lot of stuff was down. That was the DeepSeek moment. But outside of that, nothing but accumulation all year. In
This
March,
is on Trump's comments about expanding the Navy by 19 ships today.
yep,
Yeah,
that's exactly what I'm about to get into.
30% move since beginning of June. It's beautiful.
A hell of a move on a stock like this, not the sort of stock that's extremely high beta. But yeah, we've been long since low 200s. 209 is my cost basis, and now we're trading 287 on this thing. It's basically just trended up. I mean, you pull up the daily chart on this thing, it's been a hell of an easy hold. It has not given you any real headaches. Yeah, it's had red days in between, but just grinded to the upside constantly. And again, another one of these obvious trades, right? Like I called Kratos an obvious trade in the 20s and 30s. That stock has obviously more than doubled since, but I called this one an obvious trade too at 200. I was like, look, Trump is pounding the table about shipbuilding. There's only one real pure play shipbuilding SMID cap in terms of commercial viability, and that's Huntington. They build all of our nuclear aircraft carriers, all of them. So they're positioned to benefit from an expansion in shipbuilding. Now, the comments Trump made today, he said he's promising at least 19 new ships for the Navy next year. That's significantly higher than the last 2 years. So 2024 we had 8. This year we had 5, or we will have 5 by the end of the year. We have 4 currently. It's 3 times the shipbuilding orders from this year, and it's not new news because in the prospectus, the full year 2026 DoD prospectus, they highlighted this. They said their goal is 19 ships. But Trump just reiterated that today. And you saw the reaction in Huntington. You also saw the reaction in some other shipbuilding stocks as well. Once he said that today, it closed up near the highs, up 3%. But if you believe U.S. shipbuilding is going to expand, it's a pretty no-nonsense way to get exposure. And I mentioned this before. You can do it through General Dynamics as well, but I mean, it's lower beta, right? Like you're not going to get as much upside just by the nature of the mechanics of the stocks. Like this is just a much more movable stock, and it's also a stock that can enjoy a little bit more of premium and multiple expansion on narrative alone. That's not going to happen for General Dynamics, right? Like Lockheed, General Dynamics, Northrop, these stocks don't trade on narrative. They trade on multi-year backlog cycles, right? These huge backlog cycles that these guys go through that are hundreds of billions of dollars. That's what the stocks trade on. They don't trade on like incremental catalysts. But when you're a $2 to $10 billion company, Huntington's now about a 12. You do have the benefit of enjoying volatility on smaller catalysts and on incremental catalysts that your larger peers won't move off of. So I remain long on Huntington. I think today's news was really good and probably encourages the stock to push even higher from here. And like I said, zero signs of distribution on this name for pretty much the entire year. Just nothing but accumulation all year. And Materion, which is another one of my rare earth names, very very similar action on this one. And they have nothing to do with each other. Materion is a beryllium producer, the only integrated beryllium producer in the Western Hemisphere. But this is the other name in my rare metals book outside of Energy Fuels, UUU, which was down today on an offering. But Materion had a nice day today, holding up. And if you look at this action on Materion around the 9 EMA, I mean, it is picture perfect, right? You look at this action, came up into the 122 spot, peeled low volume into 116, kissed the 9 EMA, and then curled right back up. Like, just really textbook action on this thing in the last couple of weeks as it curls higher. I fully expect this thing to blow through those highs and continue onward based on this type of accumulation. So, yeah, my focus remains on these types of names that are showing relative strength, that are clearly being accumulated on a volume profile standpoint. And then obviously another good day for Nebius, which was up about 2%. But yeah, pretty great day. A couple of my names pulled back, but they were mostly all high flyers. Lyft, Energy Fuels, Genius, all up a lot for my entries. So fine to see those down. But great to see D-Pro up, great to see Robinhood up, great to see Kratos up, great to see Huntington up. So the
We do
Nike
have
aerospace
earnings up.
Nike
basket did
earnings
well.
are
Yep.
out. Yeah, let's see. What's the initial move here on Nike?
6%.
Up, nice. Nike with a little
Double
bit of a
beat.
6% up move. 11.7 billion is what I'm seeing here for revenue. Wall Street was
40.
expecting 11 billion. EPS is that saying 49 cents is what I'm seeing here. That would be a beat
That's
on
what I heard.
27 cents. So it would be a double beat for Nike. Some pretty solid numbers going on there. Yeah. 11.7, 11,
Their
49
China
cents. We had
revenue.
expectations of 27 cents. Greater China revenue. As currency neutral growth in North America was offset by a decline in Greater China revenue. So China was rough.
Yeah, they
DTC
said
was down 4%.
like 4% growth in the US, 2% Latin America, but 9% decline in China.
So the market was pricing in a decrease in year-over-year sales. They were expecting 11 billion last year. Last year, same quarter, they reported 11.6 billion. So then putting this 11.7 billion number did still get them at growth when the market was expecting them to have a revenue decline. So it is giving back a little bit of that move here, though. But I would say that's pretty significant. Where am I seeing forward guidance here? I don't know if I'm quite seeing any forward guidance in the Nike numbers. Maybe they'll report that later. But yeah, Nike's initial move is up about 3.5%. Let's just do a quick Control F for Skims to talk about Kim K in here. Nike, let's see what also the CNBC article is saying. Nike beats on earnings, a sneaker giant post surprise sales growth. So yeah, kind of talk about over there. Nike's nice. Okay, that's also not that interesting. Right. Nike says, I'm encouraged by the momentum we generated in the quarter, but progress was not linear as dimensions of our business recover on different timelines. All right. I don't think the expectations were super high for Nike. That's definitely part of this. One more time, let's do a quick Control F in here. Not for any of those interesting stuff. All right. We'll see if anything else comes out of this one. Up about 2.5% in after hours right now. Nike initial numbers were both a beat on top. And stock talk. Last thing I remember you saying was about Materion. I don't know where you're at in your
No, I
part
finished.
through
I
here.
finished.
Maybe this was yesterday where they had like all the generals and everything in one room, which doesn't happen very often.
That was yesterday, and then today was
Okay.
just him and Hegseth about all their defense priorities, shipbuilding, drones, all that good stuff. So
It's
gonna be a lot of money to be made in
construction on
defense.
Golden Dome has started, so that's a nice thing. And obviously, I'm sure you guys talked about this yesterday, but the the Wall Street Journal article talking about needing to move faster and wanting to double production of 12 key critical weapons categories, most of which are, of course, missiles.
Interesting. No, I didn't
love what they're
honestly.
doing.
I did see that one a little bit, but I didn't get the chance to dig super deep.
I like to keep it even. I like to give credit where credit is due. You guys know, or at least those of you who listen to this space, know how critical I was of the administration with the tariff stuff. I have been very impressed with the administration when it comes to how quickly they're moving on nuclear, how quickly they're moving on defense. I am impressed, and I think they deserve credit for that. So credit where credit is due. I will be a critic when I think the policies are stupid, and I will be supportive when I think the policies are good. And I think what we are doing right now with reshoring supply chain and making sure America can build the things that we need to defend ourselves is very important, and I'm glad we're doing it. So I just wanted to say that without getting too political.
They're good Americans.
Yeah, America wins, man. America always
What's your
wins.
favorite? What's your favorite politician? What's your least favorite?
Oh my God. We're not doing that. No, but I do like what they're doing. I like how quickly they're moving. They're stamping approvals quickly. They are talking to companies in person. They are taking phone calls. Like they're getting in the mud to make things happen, which is presidential administrations. There's a lot of like boots on the ground right now that are trying to get things moving domestically in these industries, and it's important because we are vulnerable as a country when it comes to rare earths. We are vulnerable as a country when it comes to drone production and shipbuilding, and so yeah, we need to do these things. We need to do them quickly, and based on the cadence that we're seeing in this first year, I think a lot of these things will get done very quickly. We're seeing impressive policies, but when it comes to aerospace and defense, 0.8%. And he's like, I think we can get the stock market to go back up. I was like, dude, let it rest for like one day. Surprised by that. Did people really believe that early? What, next year it'll be even more voters, and the year after that it'll be even more voters, and by 2030, by the end of the decade, you'll be at 70+% household participation. You think you're going to care less about the stock market then? No, of course you're going to care even more. And that's the thing. That's why like betting against stocks is such a bad idea. The crash will come and it will be bought. You know, like it always is. And yeah, maybe we'll get a lost decade, like all these guys say, like, oh, who knows? Watch out for the last decade. But if you get a lost decade, just remember, it's not retail that fucked up in that case. Everyone gets screwed in that. You think Wall Street doesn't lose money in a lost decade? Of course they do. So yeah, if you're a retail guy and you're net long and you're like, oh, when the market crashes, am I going to look like an idiot? The reality is everyone is net long. Most people are and have been. And when the market crashes, everyone will get punched in the face. So just be ready for that.
I think it was interesting that AI said exactly what you said, which is that households are fully invested, and I agree with you. There's three big things going on in this market. There's a rate cutting cycle, which has just started. There's the AI theme, which we talk about every day, and then the third thing is policy tailwinds. And you're either investing in segments where the administration has turned their guns on, or you're looking at segments of the market where they have not yet done, and you're looking to skate where the puck is going to go, like housing, like we talked about at the beginning of this space. But I thought it was also interesting that we heard it from Goldman, we heard from Deutsche, I don't know, a few other guys on CNBC talking about the same thing, talking about how institutional positioning, and we're talking pension funds, we're talking long, short, fundamental guys, and hedge funds all being underweight. And look, NDX went up 5% in September. It's the best September in 10 years. Most of these guys are below their bogeys. They're underperforming on an institutional level. So here again, if retail is fully invested, they're kicking institutionals. But what does that mean for Q4? In addition to policy tailwinds, it means you're going to have a tailwind of these institutions, which we saw, like, there's a big pension rebalancing selling off happening right now at quarter end. As soon as the calendar flips, that pressure comes off the market. You had hedge funds cutting positioning, last week for the first time in 4 weeks, right into quarter end. You had long short funds apparently taking down their grosses the most since Liberation Day. I mean, it doesn't really make sense at a time when every market index 1% away from its all-time highs. So I think the setup looks great here for the next 3 months, and seasonally, these are the best 3 months. And I'm sure you guys saw that MarketWatch article that talked about how it's even better if the market is up. 83% of the time, you're going to get 4.4% returns in Q4 if the market's up in the 3 quarters prior, and we're up like 13%. So yeah, seasonally, position wise, and I guess the other part is people are expecting upward revisions to earnings again. So nice backdrop.
We are
Yep, I
getting
agree.
close to this earnings season here, and I know we've talked about on these spaces a little bit. A lot. These in between periods, stuff gets going. But what's the term you use here? It's the great, or it's froth remover. That's what it is.
Yes.
Stock Talk likes to call this a great froth remover, and we're getting pretty close to it. The expectations are high, and I know financials are starting us off here at the start, and I wonder if they're setting themselves up for a nice hot start to this earnings season. Now, that doesn't always mean that much for the next of it, but earnings season is October is the month. October starts tomorrow.
Yeah, that's actually a good topic he segued into there with froth removal. I think a lot of people underestimate the market's ability to tactically remove froth, right? Like, a lot of people think when they see like bubble activity, like in quantum names, for example, which have been weak these last couple of weeks, or last week or so. But you see like bubble activity like that, and you're like, okay, like IonQ is trading at 25 billion market cap. Like, what the fuck are we talking about? And you kind of scratch your chin at that and go, okay, like, is that mean the market is frothy? Well, there's a couple of considerations I make in moments like that. First of all, you want to be honest, intellectually honest about the size of these bubbles, right? Like, I don't know, all of the quantum names combined trade at like a 50 billion market cap or whatever. I don't know, 75, whatever. I haven't added them all up, but let's say 75 to be liberal. But whatever, you add them all up, you get 75. I think it's actually much lower than that. But like in a $60 trillion equity market, that's nothing, right? Like literally nothing. So, okay, that's the first thing. Relative insignificance is important. But also, and this is perhaps more important, markets are really good at dumping the stocks that need to be dumped without throwing the babies out with the bathwater. Now, I'm not saying babies don't get thrown out with the bathwater. We've seen days like that, right? We have days like DeepSeek and tariff sell-off where everything gets sold indiscriminately, right? I'm not saying those days don't exist in the market. Those days happen too. But there are sustained periods in the market. Leo, come inside. Leo, there are sustained periods of the market where you have trying to bait him in the bargain, where you have corrections over longer periods, like slow unwinds of momentum in very specific industries, and the market doesn't skip a beat, right? And a lot of times those start with earnings seasons, because earnings seasons tend to be a sobriety moment for a lot of investors and traders, especially, who buy these stocks intra-quarter. They buy a stock they don't know about or don't know well intra-quarter. Maybe they like the chart, maybe they read something interesting. They buy the stock, and they get to the earnings, and then the earnings are announced, and maybe even if the earnings don't disappoint, maybe even if it's a beat, they look at the numbers and they're like, "What? Stock's trading at 100 times moment for investors, earnings a lot of the time." And that's why you get these outsized reactions on earnings reports, right? Minus 20, minus 30%, or on the flip side, plus 20, plus 30%. Somebody's watching a stock, they didn't think the numbers were going to be that good. They see numbers, they feel like they have to chase, so they're never going to get in. So you see a 20% move to the upside. Same thing happens on the downside, right? You have people who bought the stock, they're trading it. The chart was to see numbers that don't make sense to them, so they dump the stock. And in those moments, a lot of froth can be removed very quickly. Like, how many times have you seen a $10 billion retail favorite? Sometimes something else pops up that's sexier. Sometimes something else pops up that's sexier or cooler, and traders just move away from a stock or an industry. Going down much. They're going down maybe 3, 4, 5% a week, and before you know it, they're breaking down their monthly charts and their weekly charts, and you're like, dude, how did this happen? I was just looking at the stock 2 weeks ago and everything looked fine, right? That's the dangerous stuff. Those are like the sleeper killers of portfolios, where the stock did really well, you held it, it starts to not do so well, and you're like, oh, you write it off as consolidation, and then before you know it, the stock's 50% lower, and you're like, what happened? Right? That happens a lot too, especially with these higher beta names. And for those of you that are in these mid cap names, not even if you're not in the small caps, even if you're just in the mid caps, stuff happens a lot. Sentiment can die quickly, as almost as quickly, almost more quickly actually, than it can be awakened in favor of these names. So this is why monitoring price action is so important. It's why I'm so emphatic about everyone knowing how to read a chart, because you could be so high conviction on some of these stories sometimes, and they could be giving you warning signs of breakdown on the monthly charts, on weekly charts, and you're just a deer in headlights because you're like, oh, I have conviction in the story, and before you know it, the stock just gets brutalized and destroyed. I've seen it so many times, and you have to be careful of that. Like, you do not want to own a stock that is underneath all of the major moving averages on the monthly chart. You do not want to own those types of stocks, no matter what you think, no matter what type of alpha or edge you think you have. Like, consistency wise, the chances that those are going to pan out on a swing trade are incredibly low. Like, what that sort of chart is telling you on a monthly chart where stock is below all of the monthly moving average, what that is telling you is that buyers are getting less and less inclined to buy the stock at lower and lower prices. That is like the ultimate thing you do not want to see on a name. So avoid those types of names if you know what's good for you. And some of you bottom callers and cherry pickers out there have the balls to do that, and maybe you do well on it. I have a hard time believing anyone does well catching knives like that consistently. But there are some people that do it. So, if you make money doing it, like I always say, if you're making money doing something consistently, don't let me talk you out of it. But I have a hard time believing anyone is buying charts like that and being profitable consistently. So,
Well,
yeah,
that's the thing though. We are in a raging freaking bull market right now. So a lot of
there's
these
still
things do
stocks that
work
suck.
well right now. There
There's
are
still
still
stocks that suck.
stocks that suck, but even some of the sucky ones are having their times in the sun and things like that. Like, I don't know, it's a good time to kind of go down that risk curve. But when it pulls back, those are going to be the ones that pull back fast. So if you're a swing trader or a day trader, like you probably do want to be going out on the beta curve right now. Would be my guess. I
This is why
mean,
cost-based
we're
advantage.
in the middle of a raging bull market.
I mean, this is why cost-based advantage matters so much in markets like this, in bull markets, because you don't know when the top's going to be. So if you own the thing from 20 and it's 100 now, it's easier to stomach that thing going back to 90 than it is if you bought it at 80 and then it goes back to 60, right? It's a lot harder to stomach. So cost-based advantage matters so much. To ride a bull market stress-free without having to constantly look for the next hot thing, the best way to do that is to build a basket of core positions with big cost-based advantages. Like Robinhood, Kratos, Nebius. I'm probably never selling these things. Not never, but not selling these things for a long time. And they will serve me well in bull markets to come. Because my cost base is so low, I don't have to worry about the volatility. That's when not enough people are thinking about that in markets like this. They're like, it's a bull market, so there'll always be a new opportunity. I could just rotate and rotate and rotate and rotate and roll up and roll up and roll up. It's all fine and dandy when the market's screaming to the upside. It gets harder to manage a portfolio like that when we chop and consolidate and pull back. It gets much harder to manage a portfolio like that. So, like, people forget that they're human operators. People in markets forget, like, I'm a human operator. The psychology of the management matters. AI is not managing your portfolio for most of you yet. So until then, you have to acknowledge that you're a human operator and say, what can I do to improve the efficiency of my human operation? Well, there's a couple things you can do. First of all, learn the basics of reading a chart. It'll take you one weekend. Stop being stubborn. Second of all, know the things you own. Do the DD. Learn the companies. Learn the debt balances. Learn the financing obligations. That's it. Once you know those two things, you know the company relatively well. Deep dive the industry. Find out about peer valuations. See how your company compares to its peers. Find out about the growth trajectory. What do they need to execute on for that growth trajectory to pan out? Like, it's not rocket science, but it does require work.
Real fast.
Yeah, those are some fair thoughts. Yeah.
I was just gonna say real fast. September officially over. September seasonality, which is actually a 50-50 type thing. Of recent years, it's been a little bit worse, but the S&P closed up 4.48% for the month of September, the best September return since 2010.
Interesting. Best September return since 2010. There you go. A little
What was the year
stat
end for
that.
2010?
2011.
What was the Q4 performance for that year?
Oh. Sorry, that was low hanging fruit. Um, from October's open till the close of the year, another 10%. But we weren't at all time high. We were recovering after 08 still.
Okay, so a little bit of a different base.
So a little different, but still.
Still impressive. I mean, dude, I'm honestly overall just impressed with market action. Like, I would have expected a deeper pullback by now, honestly. So I don't know. I mean, I don't really have a choice but to stay in that long in this kind of environment.
38.33% off of the low we made in April on the S&P.
Yeah, I guess that was the correction.
I mean, that's the argument that
So far.
well, that's the argument I hear people make, right? Is like, okay, we needed a correction. A lot of people in December, even last year, last fall, but December, even on into the February on this space, we were talking about valuations. We were talking about we've been straight up since basically that low in October of 22. We've been up for what, almost 18 months, 15, 16 months, basically been up, other than that one little yen carry trade thing that lasted a week. And then people are saying, well, we need a correction, but those big corrections don't happen that often historically. So we had one in 2022, and then we had this one really in 2025 was the only other, like bear market type of correction we've had. It was just so rapid. I guess people write that off. But that's, from if you look at COVID, you look at that 2022 kind of bear market, and then this one with the tariffs, whatever you want to call this one from this year, it's 3 and 5 years. I don't know. And the AI revolution's still going on, right? Stock Talk, as far as I can see.
It's not stopping. I mean, I don't know if anyone saw that Larry Ellison clip from this morning, and he was like, "Me and Elon spent the weekend begging Jensen for GPUs." He literally said we were begging him, like, "Please take our money." So, like, yeah. Like I said, the single biggest risk in this market, more than labor, more than anything, I said this like, well, I think every space in the last couple of weeks, but is that the next generation of AI products are underwhelming, and I don't think they will be, but that's a risk. And if they are, then yeah, the whole thing goes kaput. And you it's just a function on how patient investors are willing to be for the pot of gold at the end of the rainbow. If investors are willing to wait for a decade for that, then this party can go on for a long time.
They're not.
Okay, well
They're
then,
not willing to wait a decade. 100% not. You have to start to see stuff. I mean,
yeah, well then that's what that to me that's where the market top is. Market top to me is a function of investor patience on the ROI of AI. And it's weird because there's another dynamic here too at play. The other dynamic at play here is like entertaining the consuming public. And you think about this thing that OpenAI is trying to launch, the new Sora video app or whatever the hell they're trying to make. Like you kind of look at that, or at least I look at that and go, come on, man! Like we want real world, AI. We want highly productive, world transforming stuff, and you're like focusing on video generators to entertain people. But from OpenAI's standpoint, like, why did the ChatGPT moment matter? Well, it didn't matter because the industry somehow found out about AI. If you talk to the guys at Google, DeepMind, or you talk to them, but you read their interviews or read their Twitter pages prior to ChatGPT, they are all talking about this. It wasn't in the public eye, but LLMs for years before ChatGPT were being discussed as a thing. They were mostly being internally demonstrated by DeepMind and by these other companies internally, right? They're like, okay, we have these things. I don't know if anyone remembers, like 2 years before OpenAI was ever released, there was like this incident with this guy at Google that was fired when he was talking to
the guy who like fell in love with the AI or
or
something,
something
right?
like that. I don't remember, but it was a couple years ago. But
He said it was alive and sentient.
yeah, and he like fell in love with it. Yeah. So anyway, it was like real life her. But my point is that these have been around for a while, right? So why did the ChatGPT moment matter, right? Like the naive person will be like, well, everyone found out about AI and AI became a thing. No, AI was already a thing. The ChatGPT moment mattered because the consuming public, was like, oh, what the hell is this? I can download it on my phone. I can ask it anything. Well, it's pretty cool, and it got better quickly. And it captured the fascination of the public. The power of doing that is insane. Like people don't realize that the corporate power of doing that. When you capture the fascination of the public, then the rest of the corporate playground goes, we want this. We want it because the public wants it. We want it to be bigger, faster, better. Now, here's my money to make it happen. And then you saw all of the layers that exploded from there: Nvidia, Oracle, data center deployment, the hyperscalers spending hundreds of billions. All of that was dominoes that fell after the ChatGPT moment. And it make you scratch your head. You're like, well, what? Like, if these hyperscaler guys knew about AI already, and it was just the public that found out, then why did all the spend follow that moment? And it's because they are aware of the power of public fascination with these things, and the power of being able to capture that lightning in a bottle in the moment. When the public became fascinated with this by the millions around the world, people were like, oh, we need to now capture the lightning in a bottle. Now is the time to move. We were considering prior to this if LLMs were viable or there would be errors and this and that, but now that's all off the table. We need more GPUs now, and we need to deploy these rapidly because the public knows and the public's fascinated with them. We have to capture this in the moment. And that's how industries work. And now, in the stage of AI, what you're seeing is everyone knows about AI now. It's getting, jokes are getting made about it in movies. And you're now at the juncture we need companies to see real bottom line impact, more than just we're using AI to deploy ads, right? That's been the extent of it, right? For most of it for till now, with companies like with Meta. But we need companies now saying we are seeing profitability impacts, earnings impacts, efficiency impacts from deploying AI. And I think you'll begin to see that in a more meaningful way when real world AI is deployed more meaningfully. In other words, robotics, automation, warehouse level software systems, broad enterprise based elements, and the money spend is going to be, in my view, the dictator of how markets do in the next 5 to 10 years. And if you want this party, this rip roaring uh, bubble, frankly, that we're in to continue, you need to see cool AI products being deployed year after year after year, and them getting cooler and more productive year after year after year. That's the key. And everything else, all the other industries we talk about, aerospace and defense, rare earths, the the liquidity and premium valuations that all these industries are enjoying are all a byproduct of AI. All of it. The whole pie. The whole pie. Everything. Record retail participation, record dollars being spent of like any technological trend, right? We're on pace this year to outpace any 1 year spend for any capex for any technology ever. Right? Like it's not a joke. We're not playing with a small industry here. We're playing with what could be the biggest industry, be from a capex standpoint, the biggest industry of all time. And if this continues, obviously, and we better hope it works. We better hope that we actually can do this, and that the extent of this isn't LLMs, which I don't think it is. I think, frankly, that risk is sort of overstated because look what's happening already. Look at the self-driving cars; they're already here. Look at the robots; they're already here. Look at the LLMs; they're already here. Now it's just a matter of all those three things getting better. The robots getting cheaper, getting tooled more effectively, getting to a point of mass production, the automation getting more sophisticated, and the LLMs getting more powerful. All three of those things, I think, will happen. I think the market's telling you that it believes that too.
It has to. Yeah, it definitely has to. We were talking some big numbers here.
Not to mention, it's the only way out of the financial hole that we're into as a country.
Yeah, innovate our way out.
Elon's dead on. Elon's dead on about
Yeah,
that.
it took all of 3 months maybe to decide that we just had to grow our way out of it.
Yeah, I think he got there and realized,
You got jaded
okay,
quick.
nobody's going to stop spending.
I mean, there's a certain train you're not going to stop. So it's not going to be that one for now, at least.
You got to win votes, dude. You got to buy votes. It's always been the biggest problem with democracy, the buying of votes. And it will probably never stop. I mean, I still like our system better than anyone else's. I'd
This whole
rather be here than
government
in China or
shutdown
Russia.
thing, I don't know why we have to have this conversation every couple months. I feel like we
I
could
don't even
figure
think
out
about it.
something better. I don't think about it that much either, but we literally might not get the NFP data on Friday. Okay.
Probably by design.
That's the
That's what I
I
said
think
at
was
the
saying that
beginning.
earlier.
Oh, I've been waiting. I'm waiting. I can't believe nobody's really tweeted that conspiracy theory yet.
That's by design. Come on, let's be serious. Sometimes people are so unwilling to be conspiratorial that they'll just like ignore the evidence in front of them. I kind of hate that attitude. Like, yeah, let's be honest. That's by design. They don't want the data to be released.
I mean, why? They're just
You
gonna
know,
change it later. So why does it matter
it'd
if
be
they put
fucking
it now?
hilarious if they were. It'd be so funny if they resolved the government shutdown like 30 minutes after the data was supposed to be released.
I'll catch you guys next month.
Like the data doesn't get released, and they're like, okay, all right, government's back on. Never mind. That'd be really, really funny, and I would not actually put it past our government to do that. But yeah, I don't know. Whatever. Government shutdown. I don't know. My comments on that are, I don't know. We talk about it every year, and nothing ever happens. So until it does,
There are some technical
cares?
stuff that seems to happen. The SEC and IPOs, if your IPO hasn't been filed and gotten approved yet, it's going to be delayed. Stuff like that. There are,
So let's be real. If we are going to shut down, we're shutting down for what, 2 days?
the
Is that
last
any of
shutdown
that
was a
really
long
going to matter?
time, right?
It's
What was the
35
last one?
days in December 22nd, I believe, of 2018
I don't
into
classify that as
January.
a long time. I thought it was longer.
That was
So
the
Yeah, and
longest in
what
history, I
happened?
think,
Like, what
or at least in years. 35 days.
did anything like happen in those 30 days? Like
No, the
bad?
market bottomed the day it closed.
Yeah. Yeah, I don't understand.
Go look at
I don't know.
December.
Whatever.
Go look at December of 2018 on your chart. You can see the day that the government shut down. It was like, I think it was like,
I remember, and I remember people saying like, I remember on my feed, people were like, "Sell everything, sell
it
everything." I
was the
remember
Monday
that.
before Christmas, and then we bounced
Yeah,
back like literally the day after Christmas. We were up, I think, 5%.
I think every time I've seen people say "sell everything" has been like
Massive buy.
pretty close to. Yeah, like every single time. I mean, dude, to be honest, everything in the market for the last 20 years has been a buying opportunity, right? So it's like really easy to say that. Like any dip ever has been a buying opportunity. The markets just go straight up. So, like, yeah, everything's a buying opportunity. I see Frank requested. Let's get Frank up here in the last little bit here. What's going on, Frank? Long time no chat. How you doing?
There you go.
Frank.
Uncle Frankie. Frankie's on a
He
ferry to
requested, so
steak dinner
maybe
right
he's
now.
Maybe he accidentally hit request.
Sarktech, I'll ask you a question in the
Okay.
meantime. This drone stuff.
Sure.
I mean, I see updates on it. I've read about it a little bit here and there, but not near as deep as you and some of the others up here have. I'm in the camp that it's coming and it's coming soon. I'm just curious with timeline type of stuff. I mean, obviously there's the EV side of stuff, but just drones in general. Like, do you know what kind of timeline we're looking at for some of this stuff, at least for like transport? I mean, and the military thing is, I think the military is probably the priority for anybody with this drone warfare stuff, but also just the other side of things. I mean, I know there's some little delivery services with drones.
You mean like
But
delivery?
yeah, just some more of.
Yeah. Okay. So you're talking about eVTOLs too.
Yeah, you could throw that
Yeah,
in there
okay.
too. I'm
Yeah.
just curious kind of where we're at, because I see like Joby and some of these other ones, Archer, whoever, and I see these prototypes. I just haven't really dove in. I'm just curious like how far away we are, if anyone knows.
Yeah, Joby's the closest. If you want exposure to that place, Joby's the stock. I just couldn't stomach the valuation anymore. I owned it at 850 and sold it at like 16. I just couldn't stomach the valuation with very little revenue. But if you want pure play eVTOL exposure, Joby's head and shoulders the best. Archer is more of a promo company than an eVTOL company. They haven't even done an eVTOL flight, so like that pretty much settles it as far as who the leader is in that industry. They both had pretty big partnerships, but again, yeah, I think Joby is head and shoulders the leader if you want a pure play exposure. As far as drones are concerned, the short answer to your question is hopefully sooner than later. Knowing an exact timeline is going to be difficult. There's a blue UAS list that has several companies that are on the blue list. That has become a little bit less important in recent months because a lot of companies have been added to it. It's important to sort of become diluted. You have new programs emerging that are a little bit more tight in terms of their roster. The T-Rex program is one of them that I talked to you about. That includes some drone initiatives. There is a air superiority program by the Air Force that also includes some drone initiatives. It also includes unmanned aircraft initiatives, to which Kratos is relevant. There are a lot of next gen programs active right now. I think there's 11 next gen programs active that have been started since the end of 23, and that's across all three branches. So you have Navy programs, Air Force programs, and U.S. Army programs. And the three biggest points of commonality in all of those programs are drones, unmanned systems, and precision munitions. And under the precision munitions umbrella, you can also put missile defense. So precision munitions / missile defense, drones, and unmanned systems. Those are the three that have been universally earmarked in all 11 next gen defense packages across all three branches of the military. To me, that makes it pretty clear where you need to focus. And that's where my focus is. That's why Kratos has been my number one pick. That's still the stock I own in the most size in aerospace and defense because they have exposure to all three of those categories: missile defense, unmanned systems with the Valkyrie, and then also with drones. And Huntington Ingalls I picked because shipbuilding is mentioned in 6 out of 11 of those prospectuses. The next gen prospectuses is U.S. shipbuilding superiority. It's mentioned in 6, and so I own Huntington HII for that. And then I used to own Mercury because they are a huge picks and shovels play for precision munitions and aerospace and defense in general. Pretty much all the next gen systems, you're going to get some sort of subcomponents from Mercury. I used to own that one. I still love that stock, but don't own it anymore. And so there are really specific ways to get exposure here. But in terms of timeline, it's really tricky. I can't tell you when exactly these awards are going to go out, but I expect a lot of awards to go out and expect them to move quickly because we have basically no real domestic drone manufacturing at scale. I mean, AeroVironment has done it. They're arguably the leader if you're talking about actual specific, you know, military deployable drones. AeroVironment's technically the leader. I like Kratos' technology platforms a little bit better, which is why I picked that stock years ago over AeroVironment. But I like AVAV too. I think they're a good exposure to have if you want exposure to that space. But there's a lot of stocks. You know, there's everything from the leaders, your Kratos and your AeroVironments, all the way down to these small cap speculative plays like RCAT, UMAC, ONDS, DPro, UAVS. So there's tons of names. I think my drone watch list has like 18 names on it. So there's everything from the picks and shovels. You also have names like Mobilicom too, MOB. I mean, I go on and on. There's tons of names. So it really depends on what aspect of the supply chain you want exposure to, how much speculation you're willing to undertake, how much offering risk you're willing to undertake, which management teams you like the best, which of those next gen industries you want more exposure to, which of them you want less exposure to. That's how you should build your basket, I think, if you're wanting exposure to this industry in a sort of, I think Godfather brought this up earlier, barbell approach way where you have some of your guys that are actually commercially viable today and very likely to win contracts, and then some of your guys who, hey, maybe if they do win a contract, the stock could 5x. You know, you want to kind of have exposure to both sides of those, in my opinion, if you want to play this theme effectively. Because I say this a lot with defense stocks, but the smaller the company, the more impactful the award, right? And the thing with defense awards is they are generally to the tune of, 8 to 12 figures. Like they're big awards. So, if you're a couple $100 million company and you get one of those awards, it literally can transform your company overnight. And in other instances, you can get a $6 billion multi-year award and you're a $3 billion company, and then you're looking down the pipe of a 40% annual revenue increase from one award. So you want to be able to look at these things in context and say, like, how important could it be, right? Because no one's going to see Lockheed win a $3 billion contract and trade Lockheed off of that. No one cares, right? So you have to know the difference of the market caps and size of the companies and beta of the stocks matters in industries like this where your goal is to capture contracts. What's up, Sam?
Can you tell me a little bit about ONDS? I know we got Prospero coming up soon, but I was wondering because I've seen that stock a lot on Twitter, but I've never really looked into it. You're saying it has a lot to do with
I was
drones. Yeah.
interested in it when it was 1/10 the size. I think at this valuation, it's crazy,
Oh, okay.
in my opinion. In my view, I think it's just this part of the reason why I bought DPro was
Yeah.
because it was trading at a tenth of the valuation of all the small cap peers, right? They're all trading at over $1 billion, and I just felt like there's some opportunity there to close the valuation gap. So that was part of the reason I bought that. But I mean, like, I can't stomach them at a 1 or 1.5 billion valuation with basically no revenue. So yeah, I can't. For me, ONDS, all of these, ONDS, RCAT, UMAC. I think RCAT and UMAC are still a little bit more interesting because you have that angle of the Trump backing that could lead to them winning more contracts. But yeah, ONDS to me is just crazy valuation. Most of them are trading at crazy valuations. Like, nothing is cheap in this space. You're not going to find a cheap stock. Kratos is not cheap at all. AeroVironment is not cheap. I think AeroVironment is even more expensive than Kratos now. I haven't looked at the PS or P in a while, but they're both expensive and they're the leaders in terms of the pure play sense. And then you have the smaller cap ones that are just, again, at insane valuations. Like, some of them are trading at like 900 times sales. Like, I can't buy that. So
Did
yeah, could
this
they go higher? Yeah.
did this Lithium
Like,
Americas thing fully go through already, or is this headline I'm seeing
It's
right
just
now
it's
the
just
growing
come
through
out
now?
now. It was rumored earlier, but no, the actual press release Has
Is that right
the
now?
press release is no, because the energy chief has said that they're going to take an equity stake in Lithium Americas. So yeah, it's basically confirming what was rumored to be happening.
Gotcha. Okay.
I think one more point that's worth mentioning, Stock Talk, when we talk about drones, like, you've got the small, backpack deployable type drones that RCAT and these guys are involved in. And I completely agree with you, by the way, on ONDS. I can't get there on valuation, but I think the more interesting segment of the market, and plug your nose in some of the valuations, but they're high for a reason. Where you can get exposure through AVAV, through Katos, through Carmen, is this whole reclassing of the Missile Technology Control Regime, right? This 35 nation, 18-year-old agreement, or 35-year-old agreement. They're basically saying that, or Trump is basically saying, we're going to redesignate some of these large drones as aircraft. And this, first of all, was the focus of this talk about ramping up stockpiles in the U.S. Like, this is what we're talking about. We're talking about Patriot interceptors. We're talking about long-range anti-ship missiles. We're talking about precision strike missiles. Air-surface standoff missiles. All of these things, which are hypersonic. But the other part of this is that this is part of Trump's initiative to not only create jobs, but also to reduce the U.S. trade deficit, right? Like, they signed this deal with Saudi Arabia back in May to sell $142 billion worth of these missiles, which previously under this missile treaty, as they were classed, they couldn't do. So who's going to get that business? Well, General Atomics and some of these large companies, but who supplies a lot of the technology for that? It's the Kratoses and the Karmans of the world through their expertise in hypersonics. So I actually think that's a safer part
Carmen's
of
a
the
great
market
one.
to focus on.
Carmen's a great one. Yeah, I know you've talked about Carmen a lot. It's a great one. That's the one defense stint I don't own.
It's actually the most expensive, to answer your question you had earlier, of AV, Katos, and it goes Katos, AVAV, or sorry, Carmen, AVAV, and Katos. But honestly, I don't think the valuations matter that much, because, again, these are they mid cap companies? Well, they're small relative to the General Dynamics and the Lockheed Martins of the world, and the RTXs, like you said. These things might see a 2% move on one of these massive contracts, but Carmen and Katos provide a lot of the the componentry that make all of the supply chain work for these things, and for them, it becomes needle moving type contracts.
Yep, I agree. Yeah, Carmen's awesome, dude. I wanted to get it. It's funny because out that we traded it on, and I was just pushed to the brim on positions at that time, so I couldn't fully open a swing on that day. But I wish I had, because that was like the local lows.
This was the Raymond
upgrade,
James
so,
$100 report. Yeah. So
yeah,
before I saw the
yeah.
report, I was like, I don't know, he must be taking like 20, 30 numbers, and then discounting them back. And, it seems crazy to me. But I went through this thing with a fine tooth comb, and, this thing has got 30% growth rates and 30% EBITDA margins. I mean, it's equivalent to a lot of software companies. And why do they get those kind of margins? It's because they control parts of the supply chain that nobody else does. So, the Northrop Grummans of the world, if they want to fulfill these government contracts, they have to use these guys as part of their supply chain. They just do not have another choice. And obviously with onshoring, that reduces even more competition. So hence the margins and hence the growth.
Yeah, and the margins were like really the main. Sorry, what?
You can go. I just want to bring George into the
cut?
conversation. No, we're good. We're good to keep it going.
Yeah. One quick thing I just wanted to say about Carmen before we move on. For people that don't know, Carmen.
What's the
with
ticker, by the
report
way?
me and God, KRMN. The report we're talking about was Ray J back on September 5th. For those that want to go, just see the power of quality analyst reports. But if you go back, this stock was trading at 52 the morning before that report came out from Ray J. Report comes out from Ray J. Stock went from 52 to 64 the next day, and stock proceeded to go higher and is now 72. So it tells you the power of some of these opinion leaders. And Ray J on that report they said pretty explicitly the company is the most profitable in the defense ecosystem with margins at 2x its next peer. And that statement at the top line of the report just put a lot of enthusiasm into this stock, and it ripped higher. But yeah, I love Karman, and I'm glad you're in that one because a lot of people I know, smart people I know, are in it. But yeah, that's one I just missed my entry on. But I love that name, and maybe in the future I'll add it to my aerospace and defense basket. But yeah, that's my favorite defense name that I don't own in my basket currently.
I did see George Prospero joining us up here before we talk about some of the other stuff. We were talking a little defense names there. I know you're actively trading. We got the Prospero trade signals going out. I'm sure a couple people from here have been looking at that. We in any defense names or anything like that? What's anything interesting?
Yeah, I mean the one that always looks interesting in our signals is AVAV. I think that tends to be like something that I would say, considering the valuation, trades very well on our upside in terms of like the long term um, options markets. It does well in that option sentiment, but an 81 on our upside is a very good stock. A very good rating considering its valuation. I think it shows that like both the options markets and a lot of analysts are bullish on where it is. So that's the one. It pops in and out of our portfolio more so as a trade swing, that kind of thing. But yeah, that's the one of the names that I heard that is the most interesting.
What names in general are standing out for you right now, George? I know we got Emp. He's posting the link right now for Prospero down below the raise. We're talking about a bunch of stuff there. It's actually there. It's getting pinned up. What are some of the names though that have been interesting for you trading around in? Anything going on? I know Eli Lilly had a good name. When I opened up the Prospero app, I'm noticing Eli Lilly and Baba sticking at me in the face here. The China and the GLP-1, that theme's been going. I'm also seeing Apple in third. That's nice.
Yeah,
Yeah,
yeah.
that's standing out.
Apple's been strong lately. I mean, we sent out, one of our alerts recently was for Tesla. That's been gaining momentum, especially in that option sentiment. It was running a little lower. That's doing well. I mean, today, and yesterday, Robinhood's really been streaking upwards for names that people are kind of more familiar with. We got into this a little bit ago in our trading portfolio, but BKKT is the name that looks very strong in our signals considering the market cap. Um, that's kind of like a higher risk one that's appeared pretty well lately. I mean, Crocs is at the top of our momentum score today. That has good net option sentiment, but it only has an upside of like for the day of like 41. So typically, like I don't play and that kind of thing. But for people that like momentum plays, that was at the
Did
top
you
today.
guys add a Sydney Sweeney like indicator? I'm just curious.
It's in development.
There we go. Well, you guys are really smart people creating some really interesting stuff. Net option sentiment seems to be one that you're talking about here. Obviously, it's the way you use it, and you
If you Google like "don't trim the hedges" and Prospero AI Substack or something related to that, you can actually see we actually used SPY net option sentiment to get everybody, issue a warning before Liberation Day. That's probably the strongest, advertisement for looking at like the index level things that we have. But a lot of what we do is kind of born out of uh kind of the marriage of this advanced back end that we've been creating for many years. I started making the systems that built it about 15 years ago, and the practical side of how do we use kind of an advanced back end to help people in tangible ways. And that option sentiment was born because I used to, like, I still do. I teach a lot of people, one on one, how to, invest, educate them, trade, different things. I offer my general advice, whether it's using our signals or not. That's something I'm pretty, passionate about as part of my daily experience. Um, and I used to teach a lot of people how to read options chains. And there was, one day where I kind of got fed up and said, what if I told you the options market's like this or didn't like it? And the person I was talking to said, well, if you could tell me that, we're wasting a lot of time. And yeah, I've never had to teach anyone an options chain again. The nice thing about net option sentiment is it was really just built to like crunch what was going on in the short-term options markets into one number, 0 to 100. And why we made that was really just to minimize, to help minimize error, get people out of the way of institutions. But that signal has been the primary thing that we've used, whether it be on the stock level or the market level, where our newsletter picks have beaten the market by an average of 67% the last 4 years, and we're really really consistent. This today for this year, we're sitting at about 67% above the market. And yeah, net option sentiment is probably the biggest reason why. And really, whether you know the options markets or don't, it's useful. The nice thing about it is you don't really have to know anything about the options markets to get use out of the signal. And, as Evan kind of alluded to at the beginning, the nice part about it is, there's value to it where it is on a 0 to 100 level, but where you see it relative to where it's been, relative to competitors for a stock, those index level things, it can be even more useful when you kind of get to know the right levels for a stock or these indexes. A lot of people report that being something that alone has really helped them improve their returns by using the app.
Love it. So, pinned up in the nest above, I mentioned a little bit talking about the crowdfund there. Can you tell me a little bit more about, Prospero itself? We're talking there about yourself, the net option sentiment, what you guys are to invest in, what you guys are doing. Obviously, we want to use this just as a place to start your research. And if you have any questions that you want us to ask George, um, yeah, no, I'm just curious more if you could tell us a little bit about Prospero, like how you go about this, like what your background is. Obviously, we're talking a lot of data and app builders and sciencey stuff. So kind of taking that and melding it into this world. Yeah, I would just love to hear a little bit more about the company itself.
Yeah, as someone that has been in AI and been in AI for almost 15 years now, I have a pretty unique background because I started on the value investing side. My first job was at Columbia Business School for pretty much the most famous value investing professor, Bruce Greenwald, um, and from there I actually worked at my first value fund when I was 17. I taught myself accounting to get that job. I did a lot of stuff when I was younger on the buy side, doing some different modeling. I actually, I got to start my first company because I figured out how to model mortgages more accurately than anyone else at my pretty large hedge fund and operating companies at the time, real estate mortgages. I basically figured out that then debt to income or how much money someone had, and I kind of parlayed that and a lot of kind of R&D investments where we did AI. We really want something that you could be able to like look maybe once a day at a stock or an index or anything like that, and get a really good impression of everything that's going on. Like obviously nothing's going to beat trying to do there is actually like create what I would call a trust engine. A lot of what we do with the app, where we give it away largely for free. Well, the app is free for now. Alerts will be our first paid feature, but some people are beta testing that right now. Then we have two newsletters. The investing one is largely free. Um, and basically that teaches people how to take the signals and build portfolios, adjust to macro events. We really walk through that in a simple way. Then we'll expand our product line. these alerts, which some people have gotten to see. Alerts are kind of actually like our first stab at blending our signals with generative AI outputs to kind of find confluence between those two signals. Then from there, we're going to roll out a web app, and we also have a paid Discord that we're going to expand. That's where like a lot of our products will be tested. There will be a more comprehensive like call and response generative AI system that we're building, that will help us people like navigate our signals and our ideas even better. But longer term, we want to be in asset management, but we kind of have a unique thing to do. And if anybody kind of wants the longer version of this, there's a really good in the discussion, a Q&A, where someone asked us like what the difference between us and Pay Finance is. And Pay Finance is like kind of like an AI personalization asset manager. But there's a pretty easy answer there. Um, Asset managers, especially startups, Wealthfront Betterment early on, they would pay about $1,000 a user. We pay about $1.50 per user to get people into our funnel. So by the time we move to asset management, we're going to look at robo advising, we're going to look at ETFs, mutual funds, all that stuff. That's probably like a 2027 thing, and where like a lot of our long term revenue is going to be generated. But not only will we have this like top of funnel that gets people in a lot easier to transition over to our wealth management products, we'll actually give people a really good way to get to know the signals. Most people when they're looking at potential places to park their money, they don't have what Prospero has, where people can still have seen it work. In our newsletter picks for in 2027 6 years, so they'll get to see where the sausage is made. So we think that not only is like a cheaper transition, we also have systems setting up to create more loyalty. And the only other thing is one of the things that's pretty important to us and why we're doing this and why we want to earn trust. Part of our long-term goal is we're going to ask people to contribute data. So we can ask, what's your temperature, and model, say, a pandemic. That's kind of the most complicated example that everybody can like understand and be like, oh yeah, I would see where the money would be if you could get that data early. But it's really going to be as simple as, our AI systems and models seeking out information from our users that make them more accurate.
Yeah, that is fair. That makes sense. Instead of me continue to hog this up here, like I said, the tweet is pinned up in the nest above, has a lot more information on kind of what he was saying there, more information on the raise and all the company. As I was digging through this, I've obviously seen Omar's post, and I'm seeing Omar on this page a little bit talking about it. How you doing, sir? I saw Omar, was gonna bring it over to you. I took a look at Tesla and Prospero. We have 100 upside score. I don't see that too often. 90 net options, 98 technical. Tesla's looking pretty good on the Prospero right now. Omar, I appreciate you coming in and hanging out with us. I wonder if you have any thoughts on the conversation there. I know, and listen, like I said, I want this to be your guys' place to come in and start your research. I don't want you to just go in and FOMO in or do something like that. But Omar, I do know you actually have a little bit invested in the round or a little bit coming from it yourself. So I wanted to hear a little bit more around how you're using it, your thoughts around Prospero, and maybe I don't know anything else you want to add into it. Any parts in the conversation?
Yeah, Prospero's upside indicator for Tesla has been pretty strong all throughout this year, even at points where people were a lot more bearish on the stock than they are right now. So that's definitely something that helped me hold conviction even through a lot of negativity. And that's worked out quite well as the stock has rebounded. Yeah, Prospero is something that I've been using for a long time now. Just the basic free app in the App Store that anyone can download, going in there, checking in the short term and long term bull and bear picks every day, and searching for stocks in my portfolio or that I hear people talking about. And they have really great, clear signals that make it super easy for anyone, whether you're an expert investor or a casual retail investor, to kind of digest these pretty complicated signals like net option sentiment. And then recently I did get the crowd fund. I saw that they were doing a crowd fund and I love the app. I use it all the time. So I decided to invest. Now I'm an investor. I own some shares too. And because I was one of the first people in the crowd fund, they gave me a peek at their alerts product, which just got activated, I think, about a week or so ago. And it's an amazing product. I've been looking for something like this in the AI space for a little bit, where AI just kind of pours through all these market signals and just gives me one pick a day. But I found that the alerts product putting things onto my radar that I might not have noticed otherwise. So I know investors are always sort of looking for ideas, signals. This is sort of looking for ideas, signals. This is something that I found is very data driven, where they're processing these signals that they're focused on in the market and just kind of boiling it down to you. So you're not spending a ton of time digging through all that stuff yourself. You're just getting this nice, simple alert, and then you can take action if you feel like it. So, I mean, honestly, it's kind of invest in the crowd fund just for early access to this alerts product. In addition to getting equity, you're able to get to get sneak peek early access into some of these new features like alerts. And I know they have a ton of new stuff coming in down the pipeline. So I feel like I already got my money's worth just from the alerts more and more. I don't think there's going to be more and more. I don't think there's going to be any investors left in a few years who aren't using AI in some capacity. And there's just a ton of room for and there's just a ton of room for growth. Um, so growth. Um, so yeah, it's always good to be able to get in the private markets for a company that you think has a lot of upside potential. You think has a lot of upside potential. A small company can easily, 10x or 100x much more easily than, say a $5 trillion giant, I think. So I'm really happy that I got involved with the crowd fund, enjoying the alerts product, and definitely recommend it to everyone else.
We're talking, I saw we were looking at the screener, and the first couple names on there are some names we spent a lot of the spaces talking about. Nebius, Robinhood, and Tesla on this growth screener. But Omar, I think that was really well said in there. Um, I imagine you don't use this too much for like. You know what? Let me ask this as a question. I'm curious how you use this for something like Tesla, which I'm sure if anyone is in here who's a fan of Omar, you know this guy knows everything inside and out with Tesla, versus maybe where it's putting something on your radar or something like that. So kind of what I'm asking here is when you know something really well, how are you using this? And when you maybe know something just a little bit, not as much, how are you using it? I know you talked about that a little bit there. I'd be curious on if there's a part of those that you enjoy using a little bit more than the other one. But yeah.
I obviously do a ton of research. I look at everything from talking to customers to how are the financials doing. And then you've got these signals, and they really kind of boil down the market activity that you're seeing in a way that is super easy to distill. So if you're thinking about your position sizing, you're thinking about, do I want to be a little more overweight or do I want to be a little more underweight on this name? Do I want to trade around it a little bit? Or just, when's a good time to get in? When's a good time to get out? These signals are really informative in helping you make those kinds of decisions. So for something like Tesla, this year when we saw so much negativity, lighting their Teslas on fire and saying, I hate Elon Musk, it can be easy to Tesla. But looking at that Prospero every day, I kind of looked at my portfolio. I looked at my Prospero watch list. I looked at the bull and bear picks, and it did help me build some additional conviction. So I use it a lot for new ideas, use the search function, but I also keep an eye on my largest holdings through the watch list functionality, which they make really easy and simple.
George, you got any thoughts to add to that?
Yeah, I mean, I think Omar used it in a lot of the ways that we hope people would, how it was intended to be created. But yeah, I mean, I think where it can really help is in the situations where it's pointing to something very different than the market. And I think in the case of Tesla, we basically, we had it at 100, where I think 98 was like the lowest it got, um, all the way when it was still at, um, I think 225. And obviously we're almost double there now. So, I think the big thing is, sometimes there's a huge difference between what institutions are betting on in the options markets and the news cycle. And we've seen that. I think this was probably one of the most pronounced examples where you'd look around and you'd hear a lot about like people saying it's Tesla's over. But then a lot of those same people that might have been planning those headlines or whatever, they're loading up in the long-term options markets on Tesla in a very convincing way, more than any other stock to be at 100 for that long. And another time that kind of reminded me of that was Meta. Like we got into Meta at 170, and the first 2 months I saw it at 100 upside, I kind of ignored it because I thought that Prospero didn't know that Mark Zuckerberg was an idiot, or at least that's what I told myself. But as I watched it sit there, I was like, oh, maybe I'm missing something here. And it's the same kind of thing. Even though there was a lot of like, distrust of Mark Zuckerberg and like kind of the zeitgeist, institutions, had started to really load up on long-term options. And I think that's where kind of the objectivity of Prospero really helped, because there is a social sentiment signal, but because of the way we kind of like separate out these ideas, it's not blended together, right? When we're talking about upside, we're looking at things like the long-term options markets. We're also looking at things like analyst ratings, price targets, the extent that analysts are um, uh, pricing the stock above where it's trading, percent buy recommendations, things like price momentum factors, which actually, with Tesla going down in price momentum, it actually shows how overwhelmingly the options markets and analysts liked where the stock was going, for it to be at 100, because obviously the price momentum wasn't necessarily there. And yeah, like that's what's really nice about a signal like upside, or net option sentiment versus like a technical signal. Technical flow is one of our 10 signals as well, by the way. But where something like an RSI on Meta at various times was showing overbought, uh, people would ask us like, it's showing overbought. Should I hold my Meta? And I'm like, yeah, if it's live at 100, it means the options markets are live with new bets being placed above where the stock is trading in the long-term options markets for it to stay at that 100 rating. Price targets keep getting raised, so it's a nice responsive signal that if you see it at 100, if you see it staying at 100, that means there's live overwhelming bullishness on a stock.
To that point, Meta in like the spring summer of 2023, RSI was like at 86 and the price was trading like 250, 260 a share. We never came back to even test that spot again. Just to go with that point there on the RSI.
Yeah, and I think that's why I like that example so much, because that's something where we had like real people coming in and seeing numbers like that, and me being like, no, I'm confident it's still good, because that's what we designed it to do, especially with the emphasis on the options markets. Like, we know that if the options markets change, we're updating very quickly, and as long as it looks bullish, the signal's bullish, and we think it has more room to run up.
I do see someone just put in. I refreshed it. Someone just put in $1,000. Nice. Or probably up to 250 different investors. I see the $1,000 tier. There is a product strategy summit invite. What does that mean?
So there's a lot of people that that throw a lot of ideas at us. We'd love to build them all, but we're definitely trying to create a group of people that have skin in the game. I always love that, for people that are just like, they're not just throwing suggestions at us, they're owners. And yeah, I mean, that summit is just going to kick it off, but we're going to host a Zoom call. We're going to share our roadmap. We're going to talk about how we think of products that get rolled out, buy-in at that level, that attend, they're going to have a say in if we, maybe reroute that roadmap and think about it differently.
You're doing? Mr. Shy Balor. This guy, this is a bit. Busy guy. He's on TV a lot. We might have gotten him at a bad time there. No,
I'm doing fabulous. How are you,
no, I'm doing
sir?
well. We've had you on the spaces hanging out with us for a little bit.
Add to positions. Also, it's just one of the tools in the tool belt. A lot of traders will tell you never make one tool your like single indicator whether you should go long or not. But this calls that expire in
Baba's the
2026,
number
back when
one
it was in the one
name. It's the
teens.
number one name on the
Yeah,
short-term bull list right now. Number two on long-term
yeah.
bull.
I mean, I wouldn't be surprised it keeps going up, but I think a lot of that asymmetric risk reward is, I don't want to say sucked out, but I think a lot of it is not as attractive as it was when I was in the one teens. And I think there was a lot of people who I remember what has happened to price action. It was like in the one teens, and then it jumped up to like the 123s, and then it pulled all the way back to the 116s. And I think there was like a lot of impatience with a lot of shareholders, people that want to go long got shaken out, but the Prospero score seemed very bullish on the short term and the long term of Alibaba, and it didn't really take long, maybe a couple of weeks, for the stock to basically trade at where it is today at around 180 bucks, which is like a 4-year high for it, and is, I mean, Prospero called it like it was truly amazing. Obviously, there were a lot of other factors that were included in there, including negative sentiment of the stock. But like similar to Tesla, I mean, when you have the herd on the other side of the position you want to be in, it creates a bit of a catalyst for anything to just really propel the stock up. And that's what we saw with Tesla. That's what we saw with UNH. That's what we saw Alibaba and many other companies, even this year in 2025, even after the market jumped up 25, 30% from its lows in April. So I continue to use it as a good sentiment indicator, but also as a good options indicator for short-term swing plays. And yeah, I mean, it's a great app. I just open it up, tells me where to go, and so on. And I just put that as one check mark for whether I should go long or stock or not.
This George Baba has been one that's definitely been you guys have gotten right. I'm looking back at a couple of the posts I made when I made like the long-term bull and bear and stuff like that. Alibaba was number 2 on the long-term bull list on July 25th. Alibaba stock was at about like 120 there. Now it had a little, yeah, it went sideways for a minute and we shot up to 180. Why did and it was on the short-term bull list for a while as well. I have a post out on August 8th, which it was on there. And these are just my posts where I was able to see it on the short-term bull list at around like 120. Why was Alibaba a name that you guys were able to do pretty well on with this? Is there something that also within that you think like maybe it's like the type of name or something that it worked well on, or is this just the power of Prospero?
Yeah, I mean, it's pretty much a blank canvas. Like that's the nice thing about it. There's nothing too complicated about like we show exactly like our thinking on this. Like you can see if you go in the app, like the short-term bulls and bears are just like, adding option sentiment to social sentiment. The long term is looking at upside, minus downside plus profitability. There's other like little like filters that we do to like de-risk some of the picks, but it really is that straightforward, right? Baba is going to be there in the short-term picks because people love it in the options markets and and in the social pages. And I think there's two really nice things about that. One is that's a lot to the market these days, especially because a lot of what we do with net option sentiment is isolating institutional options demand. So like if you see something that like the institutional short-term options markets like, and people like it on socials, there's obviously going to be a lot of momentum behind that. So there's kind of good logic to every system that we build and everything there. Um and yeah, I mean, obviously there's some other components to it, but what I really like about, especially like there's a lot of these kind of like dual signal things that I think are very helpful, but like I actually don't really like social sentiment alone. And that's because like when you see something at 100 social sentiment, like you don't really know if that's like the crescendo of the social, or or it's just that popular it's going to keep running. It's very hard to determine that. But if you're kind of seeing the net option sentiment, going up and net social going up, you can be a lot more confident that the institutions are agreeing with what's going on. Or if it's kind of going the other way. If you wake up tomorrow and Alibaba's all of a sudden social sentiment is still high, but Alibaba's all of a sudden at an 80 net option sentiment, it's fallen a lot. You could be like, okay, it's time to get out. The institutions have started to turn on this stock. So like even just using the short term and that alone, um, it's uh, it can be very helpful. Like individual signals, these combo signals are definitely like looking at everything together as well.
I'm
Yeah,
looking at a
that
Baidu right
action
here. Keep going. Yeah,
that
Em, keep
action
going.
piece, yeah, that action piece he was just talking about, I think that's very helpful for people to kind of understand the okay, how can I use this? Because there's so many tools I think for traders and investors out there, but the one thing about Prospero, it does simplify things down a lot for you. I mean, it's not hard to really understand the app and get into it. And then I like to think about the emotions. Like I think the biggest detriment to most investors or traders is emotions, right? We see people in a big market correction pullback get emotional and sell things. We see people, make rash decisions rather than, informed. I guess thoughtful decisions would be the correct term there. And in the emotional side of things, a lot of people. There was a narrative that China was uninvestable, that China was untradeable almost even for a long time. And a lot of people had Baba and Baidu, I think you're about to mention there, which I've told my success story. I had Baidu on the no trade list for a long time. I know a lot of people had Baba on a no trade list for a very long time, and trying to come back from that, get rid of any PTSD as an investor or trader, and say, okay, let me separate the emotions from the stock, and now I can use AI, I can use Prospero, and I can see, okay, well, it's both short and long term bull, and like my recent success story, Baidu. I got into it. Didn't really have to think about it a whole lot. I liked the chart and the base it had, but then I saw the signals that the AI was telling me right there on my phone app, which we haven't mentioned this on the space yet. The Prospero AI app is free in the App Store. If you haven't downloaded it yet, you should just go download it and check it out for yourself. Especially if you're considering investing, you should definitely check out the app for yourself. It's a fantastic tool. But that's one side of it is the emotions thing. I think is so important to be able to mitigate those. And like on the other side, we know that Rivian, especially around a lot of our spaces, Rivian, very popular stock, very much talked about in a lot of the circles on this app. But it's gone back and forth for quite a long time, honestly, and it's been in a downtrend for quite a long time, honestly. And it's one of those that I see. And I don't want to sound bearish by any means. I'm not taking any shots at Rivian, but what I'm saying is people can easily get married to that stock, but if you look at the technicals and what the AI is saying, the AI is saying, well, right now it's still on the long-term bear pick. So maybe that does keep you out of trouble on the other side. So as much as you may miss an opportunity because you put a stock on the no trade list or whatever you want to call it, whatever you call it in your watch list, on the other side is something like a Rivian that maybe you love Rivian and you're invested in Rivian, but instead of adding to a position, you can look and say, okay, well, actually the technicals and a lot of the net option sentiment, some of the stuff is not just fantastic right now. It's on the bear pick list.
Nice. I'm looking if you guys have any questions or anything like that you guys want us to ask as well. We got Ben asking. I'm going to ask in a slightly maybe nicer way, but this is still a very valid question. The returns and all that stuff that are kind of talked about on the website here and beating the index and everything like that by that large of a percentage. How is that stuff being verified? How can we kind of track how that is going? Maybe how can we track that in real time for people? Or even going forward, how are we can we know that stuff is real, or what's some of the stuff that you were doing?
Yeah, so like the nice thing here is like we're very conscious about like how a lot of people are like cherry picking, doing shit like that. So for the last 3 years, like the first year we actually did live trades and we shared the portfolio, but we were told that legally that wasn't the best thing to do. So for the last 3 years, we've basically been posting all our picks. Some of the midweek picks, we screenshot and we deliver it to only our paid users, but then those all go in. If you look at our profile, I think it should like click to a 6-month review, which would then have you click into the picks. But yeah, all of the picks are available for everybody to see. That sheet, you can see the methodology for how we calculate it. We share our reviews and kind of say what we see thematically. But the long and the short is, especially if you are a paid user, you can verify every pick that we make, in our entries and exits. And we've never had actually, I'm wrong. This year, for the first time, we had someone question if we eliminated something, and we immediately were able to screenshot where we entered it, the letter that we entered, the letter that we exited, link to those things. So nobody had ever questioned it until about 2 months ago, but the first person that did, we very easily identified where we were in and what we were doing. So yeah, we're very open about it. Anyone can see, and you can look at the sheets. There's basically individual year sheets that you can go, and then there's reviews. We're actually about to post our 9-month review or 3-quarter review for this year.
I would encourage
Nice.
people to click on the link up top and go in here and look. If you've downloaded the app, there's a full walkthrough of this. There's a lot of really good information in here about the crowd fund, but also just about the app itself and how you use it. Uh, how is the growth going, George? I mean, I remember seeing on here. I was reading it again just now. 163 countries that you guys are currently in. I'm assuming is it just in English? Is it in multiple languages? And how's the growth and adoption been?
Yeah, we're in 103 countries, even though like we'd like to do other languages, but we haven't had the resources to really execute on some of those things that we'd love to do in our roadmap yet. But Yeah, I mean, since we've started like marketing around the crowdfund and upping this, like I'd say that the visibility in the last like 4 months, we've 3x'd our weekly actives on the app alone, and our app plus newsletter weekly actives are up 50%. Um, which is up to about 15,000 weekly active users. Um, and then, our revenues are up, almost 40% since we started the campaign on our paid newsletter products. And, that's obviously even before we even release um, the alerts app. That's going to be our like our alerts product, which is going to be our highest ticket product by an order of like 2.5x. Um, and then, yeah, our conversions are actually doing really well too on our newsletters. Our conversion to paid is almost 10%. And the cool thing about that is only 25% of our total users even want to pay for our newsletter. 75% ask for, alerts, entries, and exits. So, that's why we're really excited for the potential of this alerts product when we, release it to paid users. But, obviously right now it's only available to people that invest in the crowdfund.
Oh man, I do see that someone else just went in and invested. We're up to 251 investors. You can see all that information right here on the crowdfund. 30 days left now. So the clock is starting to tick a little bit. Another thing that I noticed on
Yeah.
here in the
And
in
so
the link.
when options contracts are less than a year, they're no longer leaps. I feel like there should be something for when it circles under less than a month. Listen, we don't need our goal's not here to tell you guys to go in and go and buy this or anything like that, but we just want to put opportunities that, companies are working with, companies that are coming to us and that, we're selective on and this was definitely one of those. I put a little bit of money in. I don't know if we talked about that, but I do want to put that disclaimer into it. Um
Yeah,
yeah, there is just 30 days left. So if you are going to do your research, now is probably a good time to at least start it. I don't know if you guys want to make these decisions off the rip or you want to feel good about it. Download the app as well, which if you just search for Prospero AI in the App Store, you'll find it
Evan,
or
did you
on
see
our
the update
pages.
on here? The George put this out yesterday, and I actually saw this tweet pop up in my
The
feed the other
AIs.
day. Yeah, where George, you asked Grok what, you asked Perplexity too, both. I guess Evan was a part of that. I saw the one that that I guess George or whoever behind the Prospero account put out there. You asked Grok.
Yeah, I think that's the most views on a Prospero related tweet ever. And yeah, I gotta give the Republic platform credit for that one because an investor came in and they told me that the reason they invested was that they asked that question to Grok. So I was like, well, is that real? And then I did it, and I was like, holy, yeah, I was like, that's cool. And yeah, I got to give credit to Evan because I didn't even think to ask Perplexity, but yeah, Perplexity is the main AI that I use. So cool to see us highlighted there as well.
Yeah, I thought, you know what? So I was like, all right, is this real or am I just getting an advertising thing sent at me? I was like, oh, cool, this is real. It actually said it. And then I was like, all right, let's play around. Is Perplexity going to show me the same?